What's going on YouTube? It's Dave's Daily Trades. In today's video, we're going to be breaking down what happened today with AMC. I promise you all, this is nothing to worry about. We're going to be breaking it down using the Wyckoff accumulation schematic as we have been discussing for the last couple of weeks. I'll show you guys exactly where I see us going for tomorrow. And then, of course, we're going to be taking a look at the bigger picture and what the next couple of weeks may look like for AMC. We're also going to be taking a quick look at the dark pool data because some very interesting things going on behind the scenes. We're going to take a look at January's run up to where we currently sit today. And you guys do not want to miss this. This is very interesting stuff. We're going to discuss how potentially Evergrande and Citadel Securities are tied, and the collapse of one pretty much directly relates to the other. And then to end the video, we're going to be taking a look at unusual whales, options data, breaking it down for you guys. But without further ado, we're going to roll right into the intro and then hop into the technical analysis. And we're back. All right. AMC down 8.93%, currently sitting down 0.71% in after hours. So what happened, guys? Well, based on the schematic, guys, we saw this pullback coming. Of course, we have been discussing the Wyckoff accumulation. Hopefully you all were prepared for today. But regardless, it does not change the plan. We're not day trading AMC here. We are simply all in for the mother of all short squeezes and preparing for this. So let's break it down, starting with the 1 hour chart. So, of course, we actually did have a push early on today, reaching a high of $34.04. Once we did hit this level, of course, we can see it was a bit of a resistance line here at the top. We weren't able to pass through, and we started coming down for a majority of the day. But where do we stop? So as you can see, I do have a few resistance lines drawn on the micro scale of the 1 hour chart. And I do have a couple of lines. So first line is here, right around that 29.43 level where we actually closed today. Now, I do think a bounce off this level would be really great to see. However, worst case scenario, and actually it wouldn't be even that bad, is if we touch down tomorrow on Friday, because Fridays are typically slow volume days, and on low volume days, they can really drive the price down, and of course the upside, but typically we don't see that on Fridays. The worst case scenario would be a touch point at this $28.75 level. Now, of course, we're going to break it down a step further as to why this is important, and then if we do break this level, we do have a little bit of a support line here at $28.17, but I think a $28.75 would be perfect. Reason being, well, as we can see per the schematic here, we had the sell test in phase B at that 28.66 level, which was the established lower trading region for AMC per the schematic. Now, we're actually going to move this in right here. Oh, I don't want it that big. We're going to zoom it down so you guys can still see the chart. Scroll up here. And I'll link this in the description. Guys, I highly urge you to take a look and a read through the entire schematics because there's a lot more to this than just looking at the candlesticks. There's a lot to do with volume and a lot of other interesting theories and ideas. So please give this a read. A lot of my videos will make a lot more sense to you. I promise you that. Now, anyways, what we do have in this phase C area, which of course, as we've discussed multiple times, I do highly believe we are in phase C for multiple reasons. I'm not going to go ahead and repeat myself here. But what we have is we have the spring. The spring brings us back into the trading region. That's exactly what we saw the past couple of days. Exactly 3 trading days. Came up to this 34.15 level at the bottom lower end of the trading range, but still, nonetheless, back in it. Now, today was the start of the retracement where we come back and start that test phase here. The test phase actually comes from the lower end of your trading region. This would be your ST, your sell test in phase B. Sell test in phase B, look at that, is right here. Right at that 20, well, we'll see the low right here. The low was 28.91. So we are actually very close to coming down to that. So seeing that it was a, 8, almost 9% negative day is totally fine. It gets the retracement done pretty quickly. So Friday, what I hope for Friday here, I hope for Friday we actually come down, briefly touch that $28 mark, 28.90, 28.75, 85, doesn't matter. In that range, doesn't have to be perfect, is where I think we will end. Touch that and then start Friday creeping back up into a higher range. So this higher range is going to be above 34, potentially up here at like $36, $37, I would say, and then come down and retest that 31.16. The 31.16 is the established selling climax that we saw here in phase A. It was as the chart here, that is the upper lower trading region for AMC. So what we do is we get a test of the lower region, we get a test of that higher region of the lower region, which is a little confusing the way I put it there, and then we start moving into phase D. So it looks something like this, where tomorrow we come down, we test here, we start creeping back up. Monday, Tuesday, we start that movement back into the $35, $36 range. We come back down, do a quick little retest of 31. Once we hit that retest of 31, then we are back into phase D. Phase D is where things start to get interesting. Volume starts to pick up. We get that LPS followed by the BU or LPS, depending on how the schematic plays out at the time. And then we get the SOS, which of course we have briefly seen on the micro time scale using that 5-minute chart. But that's a 5-minute chart. We're talking about a 1-day chart using a schematic that is literally gone from 7/8 all the way to present date. We're talking months, guys. So the volatility in these moves are going to be much more than you would see on those micro scale timeframes that we have discussed earlier on in the week. So that's why I'm personally very excited. I think the next, after Friday, so next week we're going to say here, obviously, Dave, come on, what the hell are you talking about? Next week should be very interesting, where we do get this start to play out and possibly even see phase as early as middle of next week. Now, of course, guys, we're going to break it down daily for you folks, give you updates of where we currently stand. But nonetheless, I love this setup. I love where we are. Even taking a look at the indicators down here, the MACD starting the move to look like a crossover here. Crossover would absolutely coincide with something happening like this, where we start to move towards that LPS. LPS is in the middle of the channel, so that would be right around your $40 mark here. I love it. RSI still in the lower region here. We're currently at 36.11, so potentially going a little bit lower, maybe here to like 33 before starting that climb up. It's going to be a little bit rocky. We are going to have those volatile price swings intraday, which is totally fine to see, but this is what drives the volume in. Of course, guys, if you do day trade or swing trade on the side, you know that when there is volume, especially unusual volume, you like to go into those stocks. So what I'm saying is the volatility comes, day traders, swing traders are absolutely going to come into this, potentially even more institutions as well, picking up and getting in at just the right time. And just a little side note here, per the schematic, please, like I said before, feel free to go and read this. This is not something, if you were kind of swing trading, I guess you could say, you don't get in to the trade on phase A. Typically, or per the schematic and perfect examples here, your best entry point would be, of course, phase C, but actually waiting towards the end of phase C and early on in phase D. That is really your best entry points if you are trading per the schematic. So just want to put that note out there. But nonetheless, guys, everything is looking fine and everything is on track. Now, let's jump into some of the interesting articles. Well, first off, the entire market was red today, so I guess this all plays very well with the composite man. This guy has some crazy good ties. But anyways, the market really started up per AMC, just like AMC today. We move up, we get rejected, and we start coming down. The reason for this, in my opinion, is the CPI report. The CPI report is something that everyone has their eyes on right now. This is coming out on 8:30 tomorrow morning, Standard Eastern Time. And guys, I mean, it has everything to do with inflation, how our consumer prices are going through the roof, which they absolutely are. And this is becoming very worrisome for lots of investors. So with this news, and personally, yeah, I think it's going to be bad, or worse than expected, rather. It's going to bring markets down, which is totally fine. That plays into our thesis of that pullback into that lower range, that lower test range before we start moving up. So this is totally fine to see, and that's why I do expect a small pullback going into tomorrow. We'll see what happens, guys. But anyways, dark pool today, look at this. 79.61% in the dark pools today. I mean, guys, we talk about this a lot. I know it's a bunch of BS, but it continues to happen, and there's really a few things we can do. Of course, guys, do everything you can to go lit exchange. I really think that is super, super important. But, of course, the biggest thing, get off of Webull, get off of Robinhood, get off of all those free brokerage apps. They are garbage, and nothing is truly free in life. I know I really haven't talked about that much on the channel, but it really is something huge that everyone should be doing. Of course, it's going to help us get to where we want to go much quicker. And anyways, we're actually going to jump over to the Dr. Marco Metzler over here on LinkedIn. This is actually his latest update with AMC, GameStop, and of course, Evergrande. So his firm, Dr. Marco, has been directly invested in Evergrande. And he was really the first one to state that, listen, we're not getting our payments here. What the heck's going on? And today, officially, they have filed for bankruptcy. That's kind of BS because they have been bankrupt for, I think, quite some time, weeks, potentially even a month at this point now. But now that they're officially going through the filing process, now Main Street Media is finally coming out and saying, yep, they've defaulted along with several other Chinese real estate developers as well. So what does this actually mean? And first of all, I just want to state, seeing AMC and GameStop spoken as much as it has been on LinkedIn is truly great to see, because this is really where all of the professionals hang out. We're not talking kids or, people in their young 20s investing a couple hundred or thousand in stocks and bonds and mutual funds and stuff like that. No, we're talking about big whales. We're talking about financial professionals, people who are heavily invested in institutions, and specifically people who have their money tied in with Citadel. So this is getting out to their investors, which is very important stuff. But anyways, this part really stuck out to me here, and I'm going to read it word for word. Citadel can use Chinese commercial paper and bonds as collateral and receive 100% credit on par value for them. Once Evergrande is declared bankrupt and has a D status, and right now they're going through the filing process, so this is on the near horizon, the hedge funds, i.e. Citadel and other funds that are doing this exact same tactic, can no longer use the Chinese paper and bonds as collateral because they're worthless. They're in that D status, as he stated before, which is worthless. It's a worthless piece of crap. It's just a piece of paper. That's all it is at that point. As a result, they are unable to meet multi-billion-dollar margin requirements, and honestly, I think this is an understatement. I think it's much more than this, and must sell shares to cover margins or close short positions. In doing so, hedge funds must buy AMC/GameStop at any given price. Even if the market collapses, AMC and GME shares will soar. Apes are going to be filthy rich. Tell me something I don't know, Mr. Marco. Anyways, this is great. So, just to recap it real quick, you have Evergrande going in or filing right now to go into bankruptcy. Once their bonds are declared into that D status, they can no longer be used for margin requirements for players like Citadel and other hedge funds out there. Once they don't have money in those margin accounts, well, they got to come up with the money somehow. So either A, they sell their long positions, or B, they cover their freaking positions, which, in my opinion, they're going to fight and do everything that they can to not cover those short positions because they literally can't. It's game over for them. So like I said, guys, expect this to take some time. It's not going to happen overnight, but this is definitely some big stuff. Now, just to end the video, as always, we're going to go over the options flow for AMC. A couple interesting things that I saw, specifically coming from earlier morning here. Look at these calls being printed. We got 100, we'll start at the top, 128,000, 188,000, 188,000, to 128,000, another 188, 108, 188, and 128. So we're talking about just about 1, 2, 3, 4, 5, 6, 7, 8, 9, over $1 million in call options, all around this 2/18/22 expiration. So lots of volume, high premiums, all around a same expiration shows something interesting is coming. Now, big money doesn't lose, guys. They always know something that your average ape or average investor has no idea about. This also coincides with our earliest thesis with the Wyckoff accumulation schematic. It also goes hand in hand with what Dr. Marco is saying about Citadel and Evergrande. So we'll see what happens, guys. We'll absolutely take this day by day, see what happens. Now, breaking down the flow levels for today, the puts did outweigh the calls. Puts 61%, calls only 39%. But we can expect that on a day where AMC goes down 9%. Don't be worried about this. This is absolutely nothing, guys. It's one day, and we got to think about the 11 months that we've been holding on to this stock. And for you new apes, you'll get used to this. Don't worry. It comes. First time, huh? Anyways, breaking down expirations. Of course, we have seen a lot of action around this 12/17/21. That has really been the story since as early as I can remember, probably going back into like July, August timeframe. I know a lot of people were targeting this 12/17. Also, decently speaking here, the 12/10, which is tomorrow. But of course, 1/7/22, that's been extremely popular as well. So 12/17 and 1/7, great expirations. Lots of volume going on around here, so we'll see what happens. Now, breaking down the strikes, you can see bulls were absolutely targeting that 30, while bears on the other side were trying to push this thing back down to the recent low of right around $25. Bulls, you were unsuccessful today, you will be unsuccessful tomorrow, and unsuccessful in the very near-term future. That's all I got to say for you guys. You freaking bulls. Anyways, guys, that's all that I have for today's video. Be sure to smash that like button, subscribe for more content. Peace out, and tune in for the next one.